morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, January 22nd. We'll mix trade here right now after mostly lower trade overnight. Corn has recovered to right now about 1 to 2 lower. Same with soybeans. Bean meal has turned higher, up $1 to $2. Oil is still off about 40 to 50 points, while wheat prices have also turned higher here right now, about 2 cents better, making new highs as I speak. Beans opened steady in the overnight trade, then quickly broke about a dime before recovering. This morning, a news story hit the newswire. China has halted soybean imports from a number of Brazilian companies, claiming that the cargoes did not meet phytosanitary requirements. So we continue to see a lot of uncertainty here in the soybeans, ranging from delayed tariffs to uncertainty over biofuel mandates and credits, and of course, uncertainty that goes along with weather. Speculative traders were healthy buyers across the ag space yesterday, with the exception of oil, where there were net sellers of about 1,000 contracts. Funds bought another 6,000 contracts of corn, 14,000 beans, and about 6,000 meal. Open interest was up in all of these, an indication of new speculative money entering the market from the long side. In corn, we've got their long position now by money managers. We feel it has stretched out to about 320,000 contracts. In wheat, speculative traders did buy about 10,000 contracts, and open interest did fall about 4,000. To me, that indicates a bit of some short covering, and the difference between the speculative long position in corn and the speculative shorts in all classes of wheat has recently pushed out to a record large differential. Recent rains have brought temporary relief to key growing areas of central Argentina. Much more is needed, however, following weeks of hot, dry conditions. And for now, central and northern growing areas of Brazil do remain in a wetter than normal pattern, slowing crop maturation and soybean harvest, while also delaying the second corn plantings. The weekly EIA report on ethanol production is delayed until tomorrow due to Monday's Martin Luther King holiday. We'll likely start seeing a seasonal slowdown as stocks have built while margins have pulled back, while harsh weather also tends to slow production rates. Yesterday, S&P Global, they updated their 2025 acreage mix for corn and soybeans. They see corn acres at 93.5 million. That's up nearly 3 million from what was planted a year ago, while bean acres are expected to drop 3.8 million from a year ago to 83.3 million acres. Inside trade for March corn overnight, this after reaching a fresh 8-month high yesterday. Key resistance now rests just below 510. Also an inside trading day for March beans after reaching a 3.5-month high yesterday. President Trump has threatened to expand tariffs on China by 10% starting February 1st, along with 25% on Mexico and Canada. U.S. soybean prices are now roughly $1 above that being offered from Brazil, and that expands out to well over $1, looking out into March and April. So look for a significant, big drop in U.S. sales moving forward, as that demand obviously will now shift to Brazil. Inside trade for both meal and oil overnight. Wheat has seen some mixed trade and continue to firm here as I speak over production uncertainties here in the U.S. and in Russia. Recently saw Econ. They held their Russian production forecast unchanged at 78.7 million metric tons. However, felt there if we do see a significant cold snap, the production could be poised to drop considerably due to winter kill, given the poor shape the crop was in as it went into dormancy this past fall, and of course in the U.S. dealing here with a recent cold outbreak. So a lot of moving parts here. I wish everyone has a wonderful Wednesday.